Hey everybody, I'm Bren Brewer, your favorite realtor right here in the Conroe and The Woodlands area. I got a hot topic to talk to you about today. And if you've been following the housing market lately, you've probably heard talk about a new idea, the 50-year mortgage. Yeah, you heard that right. Not 15, not 30, but 50 years. Today I'm going to break down what this proposed loan actually is, why it's being talked about now, and what it could mean for you if you're thinking about buying a home. We'll go over both the pros and the cons so you can make a smart decision for your situation. So what exactly is a 50-year mortgage? Right now, most conventional loans in the US are either 15 or 30 years long. That means your monthly payment is calculated to pay off your home completely in that time frame. The 50-year mortgage idea takes the same loan balance and spreads it out over 50 years instead of 30. The main appeal? Lower monthly payments because you're stretching out the time you have to pay it off. The idea started making headlines recently after the president mentioned it as a way to help with rising home costs. The Federal Housing Agency, which oversees Fannie Mae and Freddie Mac, confirmed that they are exploring the concept, but it's not official policy yet. It's being discussed because affordability has become one of the biggest challenges in today's housing market. Prices have gone up, interest rates are still relatively high, and buyers are feeling squeezed. So this proposal is an attempt to make those monthly payments more manageable. Let's be real though, housing affordability is at a breaking point in a lot of areas. Even here in Montgomery County, home prices have climbed steadily over the past few years, while mortgage rates doubled from their 2020 lows. For many first-time homebuyers, the challenge isn't qualifying for a loan, it's affording that monthly payment. So a longer loan term could make it easier to qualify and bring that payment down a bit. But, and it's a big but, there's more to the story. Let's look at both sides of this coin. First off, the positives. You got lower monthly payments. By stretching your loan from 30 to 50 years, your monthly payment drops, sometimes by a few $100s. For example, on a $400,000 loan at about 6.25% interest, a 30-year mortgage might cost roughly $2,300 per month. A 50-year mortgage could bring that closer to $2,000. That extra $300 a month could make a huge difference for someone trying to qualify or balance other bills. Because your monthly payment is smaller, it does make it easier to qualify. Your debt to income ratio looks better on paper, and that means more buyers might get approved, especially younger buyers or families with student loans or car payments. There's also flexibility for the long-term plans. If you plan to refinance or sell within the first 10 to 15 years, you might not ever keep the loan for the full 50. Some people see this as a temporary way to get into a home now and refinance later when rates drop or income increases. Now let's talk about the downsides because there are several important ones. You'll pay much more in interest, and I mean much. Extending your loan means you'll pay interest for an extra 20 years. That same $400,000 loan could cost you more than $800,000 in interest over 50 years, almost double what you'd pay on a 30-year loan. You build equity very slowly. In the early years of a mortgage, most of your payment goes towards interest, not principal. When you stretch that to 50 years, it takes much longer to build equity. If you needed to sell early, you might owe almost exactly what you borrowed, even years later. Another downside is you'll still be paying when you're older. If you're 30 when you buy a home with a 50-year mortgage, you'll be 80 when it's finally paid off. That's a huge commitment, especially when you think about retirement planning. It might raise home prices. If more people suddenly qualify because of smaller payments, that could push demand up and drive prices even higher. So while it sounds like a fix for affordability, it might actually make homes less affordable overall. So what should you do if you're thinking about buying? For now, we're going to treat this as just an idea, not a new loan program, because it is not official yet. But it's a good reminder to look closely at your numbers. Ask your lender to show you payment comparisons 30-year versus 40-year versus 50-year, and look at how much of your payment goes to interest versus principal. Buying a home is about more than just one monthly payment. It's about your long-term financial picture. If you're thinking about buying soon and you want help exploring your options, whether that's FHA, conventional, or something new like this 50-year proposal, reach out to me. I'll help you run the numbers, find the right loan for your goals, and make sure you understand every part of the process before you sign anything. You can find me online at my website, brenbrewer.com, or give me a call at 281-468-5145. Again, I'm Bren Brewer, your favorite realtor, and I'll see you next time.